Hi everyone, this is Pete here. So Facebook just announced their quarterly earnings and it was a disaster. Meta share price fell almost 20% after hours. So let's take a look. Whether is this a market overreaction or is this a real trouble that you should be watching out for? Let's get straight into it. So let's dive straight into the numbers and see what is going on underneath the hood. So right here, you can see in terms of revenue, it did go up from $28 billion to $32 billion. That's fantastic, right? So that resulted in an overall revenue of $32.7 billion in total. However, the Meta part of Facebook, which they are pivoting towards, is under Reality Labs. And you can see the revenue is just about $877 million. Now, that is not the most problematic part. The problem is, even though Reality Labs increased their revenue by over $100 million since last December, right? You can see the losses from Reality Labs increased from $2 billion to $3.3 billion, right? So I don't like this at all when you increase your revenue by just 100 million, your losses increase by 1 billion. That is 10x your revenue. Now, of course, we can say that initially when Facebook is starting a new venture, it will take them some time. But to me, a 10x cost of developing a new arm seems a bit too excessive, right? Seems a bit too excessive. The next thing I want to look at is the daily active user. Now, this is perhaps one of the most important component for Facebook, right? Even though they are trying to expand into metaverse, this still remains to be their core business. And you can see just by the slope of the graph increase, right? It has kind of plateaued in the last 3 quarters, only about $1.9 billion plus and minus, right? So this is not fantastic news. In fact, it did come down from 1.93 billion to 1.92 billion users. Now, the next thing we can see is the year-on-year change. Now, if you look at the overall whole year from 2020 to 2021, the revenue did increase by 37%, right? And you can see the net income went up by 35%. So that's about the same ballpark. So that's pretty fantastic. However, the last quarter was the most concerning, and I think this is what caused the market to really mark down Facebook valuation. You can see that the revenue went up by 20%. However, with that, the expenses went up by 38%, right? 38%. So that resulted actually in a flat net income, in fact, minus 8%. So even though the whole year-on-year increased by 35%, the last quarter actually contributed next to nothing. So this is what the market is looking at. The market is wondering, will this be the end of Facebook high growth period? Next, let's take a look at their balance sheet. Now, you can see that Facebook was actually filled with cash last year, all right, over $60 billion in cash. And with the Reality Labs burning over $10 billion just in the last quarter, right now their cash position is down to $47 billion. So that is not fantastic news at all. Now, let's take a look at their cash flow. Now, in terms of operating cash flow, it did go up from $14 billion to $18 billion. So that's great news. However, you will notice that there are repurchases of Class A common stock, right, which is also known as share buyback, increased from $1.9 billion to over $20 billion. Now, that begs the question, if you need a lot of cash to build up a new business such as Metaverse, right, in the Reality Labs with Oculus and stuff, and you're already burning $10 billion in the last quarter due to this new business, why would you still spend another $20 billion to buy back shares? Wouldn't you want to keep this $20 billion for the next round of expansion? So overall, I think this is something that Facebook need to really look upon. Like, what is their strategy going forward? Do they truly believe Metaverse is the next bound? And is their core business really going to be slowing down, right? So what do you think? Are you a buyer of Facebook at this level, or are you a seller in this case? Let me know in the comments below, and I'll see you guys next time. Bye!